Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex Weekly Outlook for the week of November the 14th, 2011. Now, to get started this week, we're going to again look at this US dollar. I had talked about extensively last Sunday. A significant rally was forming in the US dollar that would take place probably around midweek. There was pretty much exactly what did happen, a vicious rally with further issues in the Eurozone, excuse me, that are clearly unresolved. Regardless of what happens with the Italian Parliament, the elections, the issues that we're seeing in Europe, the financial crisis, this is at the beginning stages. This is not at the conclusion of this, to make that very clear. So this still indirectly supports the US dollar. Maybe not as strongly. We're probably going to see a little bit of a relief in the euro, but I'm not sure to what extent. Now, looking at the dollar, we can see here that I've talked also extensively about monthly and seasonal patterns. When we look at the dollar a year ago, I'm going to bring this up just so everybody can see this. We were in a very similar situation as what we are now. The dollar is coming off, hitting a significant retracement all the way back to the 75 level. That's concluded. I suggested that the dollar would rally off of this level well over a month ago. That's exactly what's happened. We've pushed significantly higher. Now, again, looking at this, looking at our predicted MACD, our predicted TSI, this is suggesting the dollar has plenty of room to extend here. Now, that's not to say that we're not going to have a significant pullback, and we could have a number of other things thrown into the mix, but the reality is the uptrend in the dollar appears to still be intact. So we're going to continue to play this card. Now, the current position of the predicted TSI and the predicted MACD, we're struggling a little bit with the zero line at the MACD. If we can get above this, which I think we will, this will extend the dollar's rally. Only a breach of this 75 level will we see this change. Now, the probability of this is very, very low. My opinion is the dollar is taking a little bit of a breather, but again, we're dealing with this risk on, risk off. And right now the risk is really, for the most part, still off. We've had a rally, but we've had a rally on Friday and part of Thursday. This is incredibly it can be very frustrating for a lot of traders, where what's happening is they've had a good rally on Tuesday, Wednesday, Thursday, and then Thursday and Friday, they start to give it back and they're holding the position. Now, when we look at the dollar index and we break this down with all of the volatility this week, when we look at the close last Friday at 77.16, we've closed this Friday at 77.13. So really, at the end of it, it's pretty much right back where it is, where it began a week ago, despite the the 400 or 500 pip move on the euro and everything else that's been going on. So, but essentially the dollar remains intact. And again, with this financial crisis that we're having again starting up in Europe, this suggests the dollar will pretty much stabilize. So when we start to break this down and we look at our equity markets, now the S&P 500 has closed slightly higher than where it did last week, but it's still not having much of a year, to be perfectly honest, and we actually went into the negative on the year this week. So not an overly bullish picture here, guys. Looking at this, the Vantage Point predicted moving averages, you can see that we are consistently breaking below this level. In the last 2 weeks, we broke through it. Of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days, we've broke through that level 6 to 7 times. That's not exactly bullish here. This is telling me we potentially could be getting ready for a much bigger move to the downside. We see our predicted MACD has crossed the trigger. Predicted TSI has crossed the trigger. This is after running flat on the triggers for over a week. The break was not to the upside, it was to the downside. So again, this is a warning sign, the kind of warning sign that we're looking for that everybody else potentially will miss. So looking at this, my opinion remains that the equities are going to get a little bit of a boost, but a big sell-off could come again at any minute, and the primary direction is likely going to be down. This, coming into the gold contracts, this is likely to stabilize gold. You can see that gold has only had a couple of minor retracements over the last 2 to 3 weeks. It's come back, made its retracement, bounced higher. We've had 2 retracements this week alone, both touching that 18-day predicted moving average from Vantage Point and bouncing higher. With global uncertainty, gold will retain its value. That is my opinion. It is not a currency, but it is viewed by some as a currency. So with that said, this is in a number of people's view that this is the most stable of them all. I'm not sure I would agree with that, but for now the market is remaining largely bullish on gold. We are not overbought yet. Our predicted MACD has just cleared the zero line. Predicted short, medium, and long-term differences above the zero line also. We've had a couple of retracements and we're starting our move back up again. So everything looks pretty decent there for gold. Silver, not so much. Silver tends to follow that S&P 500, and you can see that this is starting to flatten out. This is another thing. This is one more thing that is indicative that that S&P 500 rally does not have the kind of legs that we may think that it does. So I would be watching silver very closely as a cue for what potentially could happen to that S&P 500. Now again, we're looking for this level 33.85 to hold. We are closed above that. It's still mildly bullish on silver, but again, I question whether this rally in silver can continue. And if those equities start to pull lower, I believe gold will extend and silver will pull back. Now, looking at light sweet crude oil, we've had some inventory numbers this week. You know, hearing a lot of chatter in the market, buy on dips between 95 and 100 for the next move higher. In my opinion, that simply is unsupported. We don't need to put a